So, in a midterm election year, the government is scrambling to try and address the United States' largest issue: affordability. The economy is feeling more and more unaffordable for the average American. The average age for a first time homebuyer ticked up to 40 years old. Consumer debt is on the rise, and people are feeling the pinch on their pockets. And as you may know, Trump is not shy about mixing things up to try and get what he wants. And he wants a more affordable economy to set the stage for these midterm elections. So in today's video, we're going to be breaking down some of the proposals he's put in place to try and address this affordability crisis in the United States. And I'll be giving you my perspective on which ones I think will actually go through and which ones are going to struggle to actually get any traction. So let's start with the first one, the 50-year mortgage. So I actually did an entire video on the 50-year mortgage and why I think it's a terrible idea. It will lower the prices of homes in the short term, but not by much. And that small deduction in your monthly payment will immediately get reabsorbed into a higher overall home price. So people will end up renting their homes for 50 years, never actually owning their home, and it won't actually address the underlying issue, which is a lack of inventory and the overall cost of home ownership in the United States. The next proposal that he put out there were direct payments to Americans, and he was calling this a tariff dividend. He proposed a $2,000 monthly payment that would go directly into your pocket starting somewhere in mid-2026. And when the government just hands out money, the problem you run into is inflation. It feels good at first, and it will provide some short-term to medium-term relief for a lot of families, but it comes back around in the form of inflated prices in the overall economy, and that money does not go as far as it seems like it should. And then a more radical proposal was that he wanted Fannie and Freddie Mac, the two agencies in charge of most of the mortgages in the United States, to take the money that they have on the books, which is about $200 billion, and use it to try and lower the overall mortgage interest rates. So if they took that $200 billion and they infused it into the mortgage market, we could see mortgage interest rates drop by about 0.2 to 0.5%. So not a significant reduction in the overall affordability of home mortgages. And it's very likely if they were to infuse that $200 billion into mortgage rates, that home prices would adjust by a similar amount upwards and negate that attempt to make things more affordable for people. Another proposal that I thought was pretty bold was Trump tried to block all institutional investment into single-family homes. And on its surface, it seems like it should free up inventory for the average American to buy instead of large corporations to buy. But the real problem is institutional ownership of single family homes is only 3 to 5% of all the single family home ownership in the United States. That is not a strategy that most institutional buyers are currently using. Most are developing large scale multifamily projects, or they're doing real estate development of single family developments and renting out those homes. So they're adding inventory to the market and turning that into their rental supply, which is very different than buying a single family home from some family that's attempting to move. So by blocking institutional ownership, you are really not going to make a large overall effect across the United States. In some localized markets like Atlanta, where there's a ton of institutional ownership, you might be able to affect change. But if you force institutional owners to actually sell their properties, then you could actually crater home prices in those markets. And that's not something that anyone really wants to have happen. The other thing that Trump suggested to address home ownership was allowing you to access your 401k and use it as a down payment on a home. And on its surface, this seems like a good proposal. But the problem is you're looking at a short-term gain of getting into a home and not considering the long-term implications of defunding your future retirement. So the stock market versus home ownership, you're definitely going to get a better return by keeping your money in the stock market. The home prices on average go up about 3% to 4% a year. You have those few years like 2020 and 2021 where there's a drastic spike in the prices, but that's not normal. You should usually expect a 3 to 5% change in home prices per year, where the stock market averages 10% returns per year. If you go back all the way to the inception of the S&P 500, it's been averaging 10% per year. Sure, there's some years where it's down, and there's some years where it's up over 20%. But if you average it out over the long term, you get better returns in the market than buying a house. And this is something that Trump himself acknowledged, and he changed his mind on actually pushing that initiative. And now we get into some of the more unconventional things that he's attempting to do. So Trump actually brought an indictment against the Fed chair, Jerome Powell.
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June.
It was over mismanaging the build out of several federal buildings. He's arguing that he committed fraud by going over time and over budget. But the requirement of proof to actually indict a sitting Fed chair over something like this is extremely high. It is very unlikely to stick, and it's more a move to show strength than to actually exact change with the Fed. It's very strange that he brought this indictment because Jerome Powell is on his way out anyway. And if he actually were to remove Jerome Powell with this indictment, it would undermine the independence of the Fed. And the independence of the Fed is why so many people have faith in the US economy. So there would be unforeseen consequences on the US stock market, US bond market, and the overall economy if he were to undermine that independence of the Fed. Another unconventional proposal was to limit credit card interest rates to 10% for 1 year. Now, the exact mechanism of how he would actually force credit card companies to do this, I don't know. But the impact would be that most Americans would not have access to credit. Those interest rates are set because they know they can make substantial profits on people who have recurring balances on their credit cards. And if you limit it to 10%, then these credit card companies are just going to restrict the requirements of how much income you have, what your credit score will be to get access to a credit card at all. So locking Americans out of the credit system could be an unforeseen consequence of capping interest rates to 10% on credit cards. The last thing that he considered was a framework to lower drug prices. So, working with manufacturers, increasing price transparency, holding insurers accountable, and capping the prices on drugs and health services. And this could be a boom to the economy. Health spending is one of the largest spending categories for a lot of Americans, and it could definitely free up money in people's pocketbooks. But the problem that you run into is that insurance providers could pull out of plans, manufacturers could decide it is not worth manufacturing anymore, and you could restrict the overall supply, which could cause the prices to go up even further. So if you look across all these plans, all these initiatives, they're definitely in the right place. He wants to increase affordability, but the unforeseen consequences of each initiative is that the status quo gets maintained or you lock more people out of the system. If you look at the overall economy, there's not an easy fix to these problems. Trump wants to introduce some initiative that will be a magic bullet and make every American feel like everything is affordable again, but it just doesn't work like that. I think the best case scenario is that with the build out of the economy, with the introduction of more energy jobs, more AI related jobs, that the GDP of the overall country expands and you just make Americans richer over time and hope that that can outpace the inflation that we're experiencing across the economy. And if today's video gave you some insight on what some of the proposals are that are being floated out there to increase the affordability for the United States, like the video, subscribe to the channel, and share it with someone else. Because I'm going to be trying to make you 1% better every single week. Thanks for tuning in. I'll catch you in the next video.